That song, Long Cool Woman in a Black Dress, is often mistakenly attributed to Creedence Clearwater Revival, when in fact it was written by the Hollies. But what we're going to talk about today are investment properties that are sometimes deliberately classified as second homes. Want to have it all and not get on the wrong side of the FBI, man? Let's learn how to rock the difference between a second home and an investment property starting right now. Hey guys, welcome to Rockin' Real Estate. I'm Rob Spinoza with Guaranteed Rate. If you're a home buyer, a homeowner, or even a real estate professional looking for home finance tips, tricks, and the occasional cool guitar licks, I've got your backstage pass to a better understanding of the mortgage business. When it comes to residential lending, there are only 3 occupancy types one can choose on a mortgage application. A primary home, the place where you live, a second or vacation home, a property that is A, a reasonable distance from your primary home, B, available for your year-round occupancy, and C, a property on which you may not enter into any rental agreements. And third, we have a rental or investment property, one where you do plan to have tenants, one where you do plan to have rental agreements, and a property from which you do intend to derive income. Now, this third category can also be somewhat of a catch-all. If a residential property is not your primary home, and it doesn't fit the guidelines of a second home, a mortgage lender will probably fall back and call it an investment property. But why is this even an issue? The answers are rate and terms. All other things equal, a rental property would have a higher interest rate than a second home, and an investment property may also require a higher down payment at the start. So you can see that there might be some temptation for buyers and borrowers to submit a mortgage application as if it was a second home, when what they really have is an investment property. Now, we realize that mortgage underwriting guidelines have existed long before Airbnb and VRBO ever did. So some of you may be asking, well, what if I have a vacation rental? And my answer to this is always the same. Your occupancy type should be determined by intent. Do you plan to use the home primarily for your own vacation enjoyment, or do you see yourself renting it out for most days of the year? Because one thing will be abundantly clear when you sign your loan documents, and that's the disclosure form that states that occupancy fraud can be investigated by the FBI. But even more immediate than that is the actual purpose of a rental property, to generate income. So if your tax returns show that you have your property rented out for a majority of the year, and yet you told your lender that you intended to purchase or refinance a second home, you can see that that investigation is not going to take very long to complete. So here's my advice when you're considering whether to call a property a second home or an investment property. Consult your loan professional and play it by the book. If you don't like the higher rate associated with the rental property, ask your lender about some of the strategies you can use to bring the rate to parity with a vacation residence. You may find they're easy to employ, relatively inexpensive, and provide the best of both worlds. If you're still unsure about the distinction between a second home and an investment property, or if you have questions about any other aspect of the mortgage process that will get you the financing you need, don't hesitate to get in touch at any of the links below or by calling us directly at 415-367-5959. And if you found today's video helpful, please click on the like and subscribe buttons below, and we'll keep the hits coming.